Bitcoin is, and each one of these words is important. It is the first global, private, no government oversight, rules-based, critical, rules-based, digital monetary system ever. And it's a very big idea. We think that the entire crypto asset ecosystem, and we think most of the crypto assets you have heard about out there, will disappear. There will only be a few for different reasons. That ecosystem in 2030, we think, will be a $25 trillion ecosystem. Right now, it's a little over $1 trillion.
At the long-awaited CM 2024 conference, Cathie Wood, the visionary CEO of ARK Invest, will take the stage as a leader in innovation. She presents a fascinating picture for the future of banking with her insightful observations, highlighting the revolutionary potential of cryptocurrencies, especially Bitcoin. Cathie predicts a massive shift in financial paradigms and names Bitcoin as one of the most disruptive inventions in history in her engrossing lecture. She predicts that by 2030, cryptocurrencies would be valued at an astounding $25 trillion, highlighting their rising importance in the world economy as she makes her way through the world of digital currencies. But Cathie sees things deeper than just Bitcoin. She explores the fields of blockchain technology, robots, energy storage, artificial intelligence, and genetic sequencing, and finds that these fields are interrelated and are driving the technological revolution that is reshaping our modern world. Of these pillars, blockchain technology stands out as the one that will accelerate the adoption of cryptocurrencies widely and set the stage for a decentralized future. Come explore with us how these revolutionary technologies have the potential to revolutionize our knowledge of finance and bring in a new era of opportunity.
As I mentioned, we're at the threshold of the most disruptive period for innovation, or caused by innovation, that the world has ever seen. And the 14 technologies that you see here are the reason why. Now, you can see those technologies, and we can talk about, George and I can talk about them afterwards. But these 14 technologies are involved in these 5 platforms. So these are 5 innovation platforms evolving at the same time. This has never happened in history. The closest we've gotten to this is the early 1900s, when 3 innovation platforms evolved at the same time. Back then, it was telephone, electricity, and the internal combustion engine. Completely transformed the world. Today, we're talking about these 5. So the 5 major platforms are robotics, energy storage, artificial intelligence, blockchain technology, and multi-omics sequencing. We have, in the last 20 years, we were fighting in the financial markets. Now, I know a lot of you are in the venture world, you're entrepreneurs, and you may not relate to this, but what we are fighting in the public equity markets is this notion, and have been fighting, that exponential growth, rapid growth cannot be sustained. And that is because we've been in a linear growth world for so long, where you do have a burst of activity, and then it decays down to the GDP growth rate. We, in the tech and telecom bubble, we first heard the expression exponential growth. Growth sustained, say 20 to 30% growth sustained for years. And many people thought that was going to happen. And that's how we got the tech and telecom bubble. We had too much capital chasing too few opportunities too soon, and it ended badly. Now, the seeds for these 5 major innovation platforms were planted during the 20 years that ended in the tech and telecom bubble. And they have been germinating ever since. They weren't ready because the technologies were not ready during the tech and telecom bubble. We didn't get the cloud until 2006. We didn't get deep learning out of ImageNet until 2012. We didn't get the other big breakthrough in artificial intelligence, transformer architecture, until 2017-18. We were not ready for prime time. back then. They are ready for prime time now, and investors are running away. They're running for the hills. What are the hills? They're benchmarks.
Cathie Wood anticipates that future technologies will disrupt global institutions and behaviors, and she firmly believes in the transformational potential of these technologies. She has previously predicted that the price of Bitcoin will climb to over $1.5 million over the next 5 years. Therefore, she is quite optimistic about the future growth of cryptocurrencies. Under her direction, ARK Invest supported this forecast by pointing out elements that indicate a stronger market than in past downturns, including a rise of addresses with a non-zero balance, a rising supply held by long-term investors, and a greater hash rate. Cathie has increased her projection even further, speculating that Bitcoin would hit $3.8 million. This upward adjustment is driven by a considerable increase in institutional usage, which was sparked by the halving of Bitcoin and the launch of spot exchange-traded funds, ETFs. We look forward to hearing more about Cathie Wood's study of these developments and how they will affect the financial industry going forward.
GDP growth. As you can see from this chart, through history, technology has caused leaps in GDP growth. And you can see from, I think it was 1400 to 1900 or 1500 to 1900, the world was growing about 0.6, this is real GDP growth, 0.6% per year. And then those three platforms I mentioned earlier, telephone, electricity, internal combustion engine, of course, transistor, computers, internet, then that catapulted us into a 3% GDP growth world. The consensus view going forward is that GDP is going to downshift. We completely disagree. And we believe that we should see a greater growth increment than we saw in the period, in the last period. So that was fivefold, which would take us to 15%, but we didn't want to seem completely crazy. So we put 8% out there. But, you know, it doesn't make any sense that GDP growth should slow down given all of the innovation that is evolving right now. And the other thing that makes no sense is that inflation will remain a problem. There are two camps right now on inflation. One, and many of you, Stanley Druckenmiller has been interviewed a few times, so you've probably heard him on Bloomberg or CNBC, beloved CNBC. And he's very much in the higher for longer inflation. We're in the 70s. This is intractable. Look at the wage negotiations, the UAW, the auto companies, the airlines, 10% per year, 6% per year. And our answer to that is many of these industries are going to be disrupted, disintermediated, and perhaps destroyed. And so what will happen is that those wage gains will end up crushing margins. This is not going to be pushed through into inflation. If anything, we believe that we're going to enter a period of deflation. Now, I know deflation sounds scary. Sounds scary because of 08-09. Everyone was talking about a deflationary bust back then, and it was horrifying, and you know, it was terrifying in many ways because there was almost a complete financial meltdown. That's not what we're talking about right now. There's good deflation and there's bad deflation. I just gave you an example of what bad deflation will be. Companies that have not invested aggressively enough to move into the new age, and they're going to be disrupted, creative destruction. The good deflation is what I described before. Those learning curves causing cost declines, which are passed through to prices, which will cause booms, absolute booms in these technologies and in productivity. And the virtuous cycle that we're going to see is going to be astounding. Now, many of you know that CNBC has called me Crazy Cathie. And you may think that now too, but we really believe what I just said because we're doing the research. We're doing the research that very few people out there are doing because they just don't believe it. They don't believe it. And they also don't believe you should do much from the top down. And that became a kind of the mantra as I was growing up in the business.
Cathie Wood presents a convincing perspective on the direction of GDP growth worldwide, grounded in past trends and anticipated future developments. She starts out by outlining the historical relationship between advances in technology and spikes in GDP growth, using the internet, telephone, and electricity as examples of technical innovations that have traditionally driven economic growth. Cathie strongly disputes the general opinion, which states that GDP growth is expected to slow down. She contends that there is no rational explanation for GDP growth to slow down, given the rate of continuous innovation. Based on the findings of her research team, she indicates that GDP growth may see a large increase, much outpacing past times. She acknowledges that growth may expand fivefold, but she estimates growth at a conservative 8% rate so as not to come out as overly positive. By highlighting the disruptive effects of technological innovation on conventional businesses, Cathie also refutes widely held beliefs about inflation. According to her anticipated, companies that are resistant to innovation would have serious difficulties during a deflationary phase propelled by creative destruction. She does, however, make a distinction between good and bad deflation, highlighting the advantages of cost reductions for productivity and pricing. Cathie concludes by restating her belief in the possibility for exponential economic development and the transformational power of innovation. She's been called Crazy Cathie by some, but she remains firm in her beliefs, which are supported by in-depth investigation and analysis. She questions received knowledge and pushes for a proactive strategy to investing in the changing market, as she highlights the value of bottom-up research in understanding market dynamics.